Hi, welcome back to CBSE Board Economics. I'm Saddam Hussain here. We have been discussing the budget, government budget, its objectives and parts of it. We've already seen the government budget has two components or parts. One is the revenue budget, the other one is capital budget. And revenue budget again has two components, revenue receipts and revenue expenditure. And capital budget also has two components, capital receipts and capital expenditure. Now today in this short video, we're discussing the difference between revenue receipts and capital receipts. Though we have seen separately, now let's differentiate between these two, revenue receipts and capital receipts. Which are the revenue receipts? Revenue receipts are taxes which the government gets. It can be direct taxes, indirect taxes. And which are the capital receipts? We have seen briefly, capital receipts are loans, or we call them as borrowings, recovery of loans and disinvestment. Now let's see the differences between revenue receipts and capital receipts. Revenue receipts neither increase the liabilities of the government nor decrease its assets. Make sure. Revenue receipts neither increase the liabilities of the government nor decrease the assets. What it means, we discussed already. Now we'll discuss once again. Revenue receipts neither increase the liabilities of the government. When the government is imposing direct and indirect taxes on you people, income tax, property tax, when you pay, the government is not liable to do anything for you. That means liability of the government is not going up, nor the government is selling anything to you, nor the assets are coming down. So revenue receipts neither increase the liabilities of the government nor decrease its assets. And what are capital receipts? Capital receipts either increase the liabilities of the government. When the government borrows loans from World Bank, when the government borrows loans from Monetary Fund, International Monetary Fund, and when the government borrows money from IMF, International Monetary Fund, or the government is borrowing money from other governments in the world, so obviously liabilities of the government will go up. What it means? Liabilities means the government is liable to pay interest to them or decrease the assets of the government. So how does the assets of the government comes down? So the government is selling PSUs, public sector undertakings, or the government is issuing share certificates of these PSUs. So obviously the assets of the government are coming down. So I hope you got the first point. So first point, revenue receipts neither increase the liabilities nor decrease the assets. Capital receipts either increase the liabilities or decrease the assets. So the second point, revenue receipts are recurring in nature. Recurring in nature, every year or every month, every quarter, people have to pay it. Revenue receipts, recurring in nature. Recurring in nature, we'll take again an example, income tax. Every year, you are liable to pay to the government. Property tax, wealth tax, interest tax, recurring in nature. Capital receipts are not recurring in nature. Recurring in nature, not every year the government borrows loans from the World Bank. Not every quarter the government is selling PSUs or issuing the shares of public sector undertakings. Non-recurring in nature. Revenue receipts are recurring in nature. The next point, revenue, we have already seen there are two types of revenue receipts we have in the government budget. One, you have tax revenue receipts. These are the receipts or the revenue which the government collects in terms of taxes, which again these tax revenue receipts are divided into two parts. We discussed already direct taxes. Which are the direct taxes? We have income tax, corporation tax, property tax, wealth tax, interest tax. And then you have indirect taxes, that is GST, goods and services tax. Then you have non-tax revenue receipts. Again, non-tax revenue receipts are divided commercial revenue and administrative revenue. What is the commercial revenue here? This is the revenue which the government gets by selling goods and services. This can be electricity, which can be dividends, this can be postage stamps, they sell it, so they are collecting some revenue from public. And administrative revenue, this is the revenue which the government gets by in the process of administration. This can be fees, this can be college fees, this can be the fees which they charge when you buy and sell properties, or when you buy firearms, and tolls, which all we have, that is the administrative and commercial revenue. And these are again capital receipts. There are two types of capital receipts. One is loans, borrowings. So when the government borrows money, so obviously the liabilities of the government will go up. Recovery of loans, when the government is recovering all the loans which they had given it to other countries or to the state governments or union territories, obviously the financial assets of the government have come down. And the disinvestment of the PSUs, issuing shares of the PSU, that means, or selling outright the public sector undertakings, obviously the assets of the government have come down. So we're discussing once again, so the difference between revenue receipts and capital receipts. Revenue receipts neither increase the liabilities of the government nor decrease its assets. Capital receipts either increase the liabilities of the government or decrease its assets. Second point, revenue receipts are recurring in nature. Capital receipts are non-recurring in nature. Revenue receipts are divided into two parts, tax revenue receipts and non-tax revenue receipts. Again, tax revenue receipts are divided into two parts, direct taxes and indirect taxes. A few examples of direct taxes are income tax, property tax, wealth tax, and indirect tax example is GST. Capital receipts are again divided into three parts. One is loans, we call them as borrowings. Number two, recovery of loans. Number three is disinvestment. That's all we have time for this short video. Till we meet next time, goodbye from Saddam Hussein.